Hey market friends! Welcome back to Will of the Market. Today we're talking about one of the most talked about strategists on Wall Street, Tom Lee. You've probably heard his name pop up in headlines, social media, or financial news. Some people call him a permabull. Others call him the Oracle of Wall Street. Whatever you think, his predictions move markets, or at least get people talking. Think The Big Short meets Jerry Maguire, bold calls, big confidence, and plenty of drama. Let's break down what he's been saying lately, how he stacks up against other analysts, and what investors are thinking. Who is Tom Lee and what is he saying? Tom Lee is a market strategist, co-founder and head of research at Fundstrat Global Advisors, and also chair of BitMine Immersion Technologies. He's famous for bullish calls, especially on stocks and crypto. But he's also made nuanced predictions based on macro and sentiment shifts. Recently, Lee has been clear. He believes the market still has room to rise. He predicts the S&P 500 could hit as high as 7,700 by the end of 2026, extending the current bull market into its fourth year. His logic? A mix of Federal Reserve tailwinds, AI and tech dominance, energy infrastructure growth, and new blockchain adoption. He also argues that a year like 2025, which some investors called a V-shaped rally, shows the market can overcome fear, doubt, and volatility to keep trending upward. On the crypto side, Lee has made some eye-opening forecasts. He walked back an extremely bullish Bitcoin call. He once projected as high as $250,000 for BTC, but still believes Bitcoin could top $100,000 by year-end, and that crypto assets remain undervalued compared to their long-term potential. And he hasn't forgotten Ethereum. Lee has repeatedly said investors are still early on crypto adoption and sees crypto entering a supercycle driven by institutional flows, wallet growth, and broader liquidity. How his views compared to other analysts? So how does Lee stack up against the rest of Wall Street? If analysts were characters in The Avengers, Lee would be the enthusiastic Tony Stark, bold, optimistic, and sometimes controversial. Some analysts warn his targets are too bullish or too reliant on perfect conditions. Many Wall Street economists remain cautious about inflation, interest rate cuts, or recession risk. Those voices often present a more muted forecast than Lee's near-term upside targets. For example, while Lee predicts continued gains in stocks and crypto, other analysts emphasize risks from interest rate uncertainty, corporate earnings pressure, and global macro headwinds, creating a more mixed consensus. In effect, Lee's outlook tends to lean bullish when others say, be cautious, and that's part of his identity, sometimes contrarian, sometimes confident. What investors are thinking right now? Investor sentiment around Lee's comments is mixed, just like Game of Thrones reactions to plot twists. Some investors embrace his bullish forecasts, especially in tech and crypto sectors. There's chatter on social platforms that markets are oversold and poised for a rebound, echoing Lee's calls for a buy-the-dip mentality. Others point out that betting big on price targets like 7,700 for the S&P 500 or six-figure Bitcoin requires near-perfect macro alignment, something that not every analyst expects. At the end of the day, sentiment is split. Bullish investors respect Lee's historical accuracy and aggressive targets, while skeptics see his views as best-case scenarios that could fall short if markets shift. Conclusion: if Tom Lee were a character in Inception, he'd be the one still dreaming big after everyone else woke up. He sees opportunity where many see risk, and sometimes he's right. Other times, not so much. His views are influential, confident, and worth listening to, but like every analyst, they're not a crystal ball. Use them as guidance, not gospel. If you found this helpful, hit like, subscribe, and comment, Tom Lee, if you want to follow up comparing his calls to other top strategists. Until next trade, may your gains be smart and your risks calculated.